I'm back for the afternoon session here. On my dashboard here, I have the micro for YM, NQ, and ES. I'm actually looking here to see which one would give us a setup, either to go long or short. Some criteria in looking for the setup. I always look at the ADX, make sure it's above 20, and then look on the chart for the setup. As you could see, we're in a chop mode. The wicks of the candles are all long. The volume is good, but because the ADX is below 20, you get this chopping, this chop mode. So if it looked like if you could have short it, but this was the best short here on this signal here, crossover, signal, and we came down. But look what happened. If he was in this trade, he would be up and you'd be down. This is no good environment to trade. The best trades is when you hang below the 5 exponential moving average. This is a crossover where the 5 cross below the 21. That is indicated by this here. We went into a squeeze, break out of the squeeze box, and we just drop. This was good because here it rallied and tried to break out, but it stays hanging below the 5 exponential moving average. So you could have followed this down, book profit. The way I have this set up, each one of this grid here is 20 ticks. So if you're scalping a E-mini or a micro, you know that every time we come into one of these boxes here is 20 ticks. So it gives you a good indication how much profit when you're scalping you want to make. Sometimes the market on a daily basis don't give you 20 ticks, they give you 10 ticks. Well, you could always adjust your setup to suit that. So right now, this is 15, it's choppy here. If you take a trade here, you'll be chopped up. You won't make any money. It goes up and it's come down, but it's in a downtrend technically, right? You have the squeeze below the line. The volume is low. So if you was to take this trade, you'd want it to pop up and then come down. All right. So here we go. We get this bar indicated 30% more volume just came in here than this previous bar here. 30% more. What you see is even it's 30% more volume, but 30% more value on the prior candle, which was nothing, right? But you get that pop up. So if you try to take a short here, you would want it to come up back, touch the trend line, and then try to take it down to the 50% mark here. This 50% is 50 plus 50% from the opening print. So let's see if we could take a trade here, a short here. Got fill, sell fast, it got fill. Let me see if we could take it down here. All right. Remember, it's choppy. No, the volume is low and the ADX is below 20. So you would get this chopping motion. There we get the drop. So if you take this trade, all right, it would be up $20 on a micro. $18, $20 on a micro. That's if it's $20, that's times 10. Because a micro is 1/10 of an E-mini. That was $200 on that play there. But you see how choppy it is? It goes right down, flush, came right back up, right? And we create a low. Now we're going to pivot back and then try to come back and test this 50% mark. Then we looked at to book some profit in this trade. Okay, we could set our target somewhere around at 22. We get to 22, we could take it off. Let's see if we get fill. I'll put it just here at 50% and below the prior swing. It should come back and test the 50% or the prior string. Bam, we got fill. Simple scalp. Timer is correct. I take the trade because we were in a downward trend even though we were choppy, right? These red dots indicated a downtrend. We break the trend line and we came down. So if you have taken micro, you make 20 something bucks, right? If you take an E-mini, it was over $200. Quick scalp using my alignment framework with price action analysis and knowing where to take the profit and get out. Why I take it at 50%? Because this 50% actually works as support and resistance, right? And the 50% was from the opening print, 9:30 print. The market rally up on 9:30 plus 50% plus 100%. So that's a quick scalp, easy play. You're in and out. If I close this chart, I would show you these are my swing trend analysis and framework setup. I have indicators to show you when crude close, when US go to lunch, when gold close, etc. It's all would, if you join our trading room, I would able to go in depth, how we take the trade, why we take the trade, or why did I take that trade, all right? This here, I wouldn't have taken it here. I took it here because it came back and tests the trend line and I look for the fail. But I take it because it's the time of day, right? So around 2:45, this line indicated here was my 2 o'clock time frame here. And also when crude close. So I look to take trades at certain times of the day, high probability trades. I go back here. All right, look at all these guys. Everybody fall at the same time. On this framework here, I have my NYSE ticks, up and down volume, the tick Q, which is used for trading the Qs. I have my advance and I have my decline. All right. So we expand any one of these charts. See, this was a beautiful trend here. This here was chopped. When you go into the squeeze backs, the squeeze backs is actually, if you never exposed to what the squeeze indicate is a Kelty channel and a Bollinger Band. And I could explain that. Right? This here was choppy. These were nice scalp, but you got to be in and out, right? This was nice because we got the drop, but I know exactly where I wanted to take profit on that YM. And the YM, I know exactly where I want to take my profit. We get initial drop, pivot after the low, but we pivot in a downtrend. So I expect it to go up and then come right back down, and then I set my stop. This is my volume indicator, ADX, the squeeze, and this is a proprietary indicator here. All right, this is the one that generates these signals here. The K and the R key retracement, etc. That's all for now. I'll be closing this session.